Hello everyone. Today, we will come to an important economic news from the US, related to the PCE inflation index, also known as the Personal Consumption Expenditure Index in July. This is an inflation measure that the US Federal Reserve, or Fed, is particularly interested in when making decisions on interest rates. The latest report showed that the overall PCE index rose 2.6% year over year, unchanged from June. Meanwhile, the core index, which excludes the volatile food and energy components, rose 2.9% year over year, up slightly from 2.8% in the previous month, suggesting that price pressures remain in the economy. Personal income rose 0.4% in the month, while consumer spending rose 0.5%, reflecting steady purchasing power. Services accounted for more than $60 billion in gains, while goods contributed nearly $49 billion to the total. So, what does this data mean for the Fed's monetary policy? The Fed's inflation target is 25%, but the current figure is higher. However, the market still expects the agency to start cutting interest rates at its September meeting. According to statistics from CME Group, the probability of the Fed cutting interest rates increased to nearly 90% after the release of the July PCE report. Experts say that although core inflation has been on the rise, in the past 3 months the Fed still needs to consider the weakening of the labor market. Therefore, they are likely to choose the path of lowering interest rates to support the economy, while continuing to monitor price developments in the following months. In summary, the July PCE report shows that U.S. inflation has not cooled down completely, but is still enough to strengthen confidence in an upcoming interest rate cut. This will be an important factor affecting stocks, bond markets, as well as gold prices in the coming time. If you are interested in the specific impact of this data on each industry group and upcoming investment opportunities, please leave a comment so we can discuss further. Don't forget to like and subscribe to the channel so you don't miss the latest economic and financial analysis.